Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday the 5th of December 2019. And earlier today, we published a video entitled, Why are silver prices falling more than gold? Now we've placed a link in the description box below, but it's well worth a listen as it explains much. Now this video is more a practical one, highlighting why buying silver coins and bars in the United Kingdom from a United Kingdom dealer is nowhere near an attractive investment proposition than buying it in the US, for example, or when comparing to buying gold in the United Kingdom. Now we highlight this by showing you a comparison purchase we made some nearly 6 years ago. So let's take a look. Today, we're going to show you a purchase that we made back in 2014, where we acquired some silver and some gold. And we wanted to really highlight, by comparison, how well these two investments have made since that time, as we are now talking almost 6 years ago. Now, on the 20th of February 2014, we purchased a kilo silver bullion bar from Bullion by Post, which was their best value bar. So we couldn't dictate which make the bar would be, but we knew that they were selling it at the cheapest price. Now, I don't know how well you can see this. Hopefully reasonably well, as I'm filming this on my own, so I haven't got a cameraman here. But you will see the date in the middle, 20th of February 2014. And the price of the kilo bar was £472, plus VAT of £94.40, resulting in a price of £566.40. And this is the bar. That's the certificate. It's by Metalor. And this is, as you can see, the bar, the 1 kilo bar. Nice thing, not overly attractive, but certainly a substantial piece of metal. Now, within just over a week of purchasing this, we then acquired 5 gold sovereigns, again from Bullion by Post. Not the cheapest place in the United Kingdom, but also not the most expensive, very reliable company. So on the 28th of February, I've just covered up the delivery address, but on the 28th, we purchased, 2014, 5 gold sovereigns at £203 each. Notice no VAT. So the total cost was £1,015, but the keynote is that the sovereigns were £203. And I have 2 of them here with me at the moment. The rest are locked away, but this at the time was £203. I have to admit I much prefer gold to silver to look at, but that's just a personal preference. So, to give you an idea, in terms of purchasing parity, roughly speaking, there's 2.5 of these to a box of silver, or I should say a bar of silver. So let's now take a look at how the prices have performed since then. So if we go to the Bullion by Post website, might as well keep some continuity, and we look at the price of gold over the last 10 years, we can see, as shown on the screen, that on the 25th of February, which is the closest I could get to the 28th because it jumps in weaker terms, on the 25th of February, gold was £801 and 2 pence an ounce. Now this is when we paid £203 for a sovereign. So £801 and 2 pence an ounce. And if we have a look at the moment, the current price of gold is £1,122. So the difference in price is approximately 40%. £321. So we've got 40% growth. Now, let's take a look at silver. 10 years, so we can get the date in. And remember, the silver was purchased on the 20th of Feb 2014. And on the 24th of Feb 2014, the price in sterling terms is £13 and 25 pence. And when you compare that to the current price, you will see that it's £12.84. Let's go back, 20th of February 2014, 24th of February, £13 and 25 pence. And now it is £12.84. So that is essentially a loss of 41 pence. However, that is not where the story ends. Remember, we told you that we purchased the sovereigns for £203 each and the silver bar for £566 and 40 pence. Now, we could sell these on eBay and get a higher price, but when one does that, one will automatically find that there is risk associated with it, fees through eBay, and also, of course, PayPal fees or whatever money transmission service we use. So let's say we will sell both our sovereigns and our silver bar back to Bullion by Post, who, in fairness, guarantee to buy it back if you've purchased it from them. So you can't quite, let me shrink the screen so you can actually see what I can see in totality. Here we go. So if I now click on sell, and we come down to selling gold coins, if you can see in the center of the screen, you will see that a gold sovereign that we pay £203 for, they will pay us £253. So that's a £50 profit, which per sovereign, which is approximately, if you work it out, 25%. However, if we wish to sell our silver bar, if you look down here, we will get £413 for it. Now it cost £566, and although silver has gone down, we've shown you it's only gone down literally 40 pence. But what has happened? Because of course when you sell it back, you automatically lose the VAT that you have paid. And so you would actually lose on that investment £153. Now that, against the original cost, is a loss of 27%. So even though silver has gone down frankly less than 1%, we are losing 27%, which is a mixture of the 20% of VAT and also the premiums and profit, if you like, that the bullion house is making between buying and selling. So it is little wonder that when one, particularly in the United Kingdom, but it applies to other areas in Europe too, purchases a precious metal for investment reasons, it is little wonder that gold tends to be the metal of choice. Now, we very much appreciate that in the United States the situation is slightly different because you're not paying that level of taxation. So not only over this time period, and it just so happens, as we said, we purchased it not at the best time, but also not at the worst time. If I go back to the charts, gold over 10 years, when we purchased gold back in February 2014, we can see that gold is not that far off its low. And when we look at silver at the same time, back in 2014, again, okay, it's not the lowest level, but it's also nowhere near its peak. And you have to make a decision at some stage. We have actually lost £150. Now, when silver peaked just a couple of months ago, we could actually get £465 from Bullion by post for that kilo bar. That still would have resulted in a loss of £100. Essentially, the VAT payable. And this provides quite stark contrast to hopefully anyone looking to invest in precious metals, particularly outside of the United States, because in the United States, and we've said this often, you are gifted in a way because you are acquiring silver far cheaper than anyone practically in the West. And yes, someone will no doubt point out to us that you can purchase it from companies like Silver to Go and some others where the VAT is still mitigated. It is to a large extent, but still their premiums are higher than they are in the United States. So you will, although the loss will not be as great, there will still be a loss over that 5-year period. And we haven't picked, it would have been very easy for us to have chosen here, for example, where silver was £29 in 2011, or in 2012 when it was £21, or even here in 2013 when it was £15. No, we've shown you roughly when we thought it was starting, not quite, because we've made purchases down here as well. But we wanted to show you 2014 was when we bought the kilo bar. And we wanted to show you, as you can see, it's not quite equidistant, it's closer to the lower end. And despite that, a loss has still been made. It will take some time. Silver will have to go up quite a few dollars per ounce before we can hope just to recover our initial investment. And that is after 5 years. Now, we're not talking down silver. That's not the purpose of this video. But it is to point out that there are numerous considerations that have to be taken into account when one considers making purchases for investment reasons. And just while we're on the page, let's suppose we wish to buy a silver Britannia from Bullion by post. Click on buy, you can see that you can purchase it VAT-free storage for storage purposes. And there's a 10% off saving, so a Britannia would cost you £15. However, if I were to purchase it for physical possession, the 2020 Britannia, and I click on that, you will see, for one, it's £17.90 plus £3.58, which comes to £21.48 to purchase one. If I wanted to buy it today and then sell it tomorrow, and assuming the price doesn't change, remember £21.48, if I click on sell and I come down here, Silver Britannia, all years, so it doesn't matter which year I'm selling it, I will get £12.87. And I'm going to do a live calculation in my head. Or let's put it, no, let's, if I can, let's see if I can put up calculator. Can I shrink this? Okay. Hopefully you can see the calculator on the screen. I will try and widen it slightly. There we go. Okay, calculator. £21.48 will be the buying price for one. The selling price would be £12.87. So I would immediately lose £8.61. If I divide that by the buying price, £21.48, and times it by 100, I will lose 40% in purchasing that item. Now, if I go back to gold, let's make it fair and equal. And let's say I'm going to purchase a gold sovereign, and I click buy, and I'll choose the latest one, the more expensive one, 2019 at the moment. For one, I will pay £285. It's cheaper if I buy 1,000, but I'm only going to buy one. £285 to purchase. If I wanted to sell that sovereign, and we saw this a little bit earlier, sell sovereigns, I will get 253. I'll round it up to 254 because it's only 11 pence off. £254. So let's go to our calculator. 254, that's right. And to purchase it is 285. So 285 minus 254, so I would lose £31 on a sovereign, and approximately it's 4.25 sovereigns to an ounce, approximately. So divide that by the original price times 100, and I would lose 11, I'll round it up, 11%. So buying and selling at the same price on silver, I'd lose 40%, and on gold, I would lose 11%. So, there we have it. Gold is by far more an attractive proposition than buying silver from a UK dealer, save if one buys it in storage. And then, of course, you have the counterparty risk or accessibility risk that is associated with that investment. Now, equally, of course, one can choose to sell one's gold and silver on retail sites such as eBay or similar, but one must also then take into account risks of fraud, non-delivery and fees. Now, that said, and this is the reason we set up the channel Illuminati Silver, over the long term, we believe silver has an amazing future. Now, it may take 10 to 20 years to reach its zenith, in our opinion. But anyone under the age of 40, if not 50, should seriously consider acquiring some in time for retirement, or if one makes the purchase with a view to handing it down the family tree. Now please, by all means, share your view and comments relating to this video. And we close by saying yes, silver may indeed rise considerably before 10 to 20 years is up, but if you purchase it with that intention, then you are highly unlikely to be disappointed. Now we conclude this with the same conclusion we made in the video we published earlier today. Our view, for what it's worth, is that silver will have its day under two scenarios. Serious financial disaster, where gold reaches levels beyond the affordability of the normal man in the street or the average investor, and they turn to silver as a substitute monetary metal. Or the second case, when the industrial or commercial demand for silver outstrips the ability of miners to mine it in sufficient quantities to cater for the demand. In the current economic cycle, the latter appears at least to be unlikely, certainly right now. Yes, there could be an invention which everyone deems they must have, and this could break the trend, but failing these options, we simply cannot see any reason why silver should rise to the moon any time soon. There is, however, a third option, which we did not include in this morning's video, and that is ultimate decline in mining supply, or the increased costs associated in mining silver that may now be more difficult to reach because all of the inverted commas easy deposits have already been withdrawn. And this is why we believe 10 to 20 years will start to see that decline have a significant effect. Thank you for listening, and if you haven't already done so, please subscribe to this channel, not forgetting to press the bell sign so that you will be notified as new videos are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.